Ta, 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 ta. Backpack in my tie. It's call me miss. But that's all over though. Real work. The money has chose us. Let's get into it. So we're gonna be speaking about NASDAQ and what we possibly can see for this upcoming month. The winter is over. Spring is here. September is here. Got my laptop right here on my car. Let's get into it. So anyway, let's get into it. It's a new month. September's here. And I want to have a look exactly what NASDAQ can possibly do this month. Obviously, want to monetize, want to make profits. So let's get into it. Let's get into it. What I'm currently looking at right now, I'm on a 4-hour chart. I'm looking at NASDAQ. I haven't analyzed it as yet, so I'm just going to zoom in a bit there. Hopefully you guys can see that. I'm just going to zoom in a bit. And initially, I don't want to just go too far back as to what NASDAQ has been doing. I want to focus on the current movement, right? And today's topic is quite simple. How to catch the entry. You know, how to catch the entry is quite simple. So we're going to get into it. Let's go. I'm on a 4-hour time frame. So easily what I'm going to do now, I'm just going to simply just highlight the lowest point I possibly see on a 4-hour time frame on NASDAQ that has taken place obviously over the current past month, 4 weeks. Lowest point I see obviously is right here. Why am I doing this? Because I just want to be able to analyze and work from a certain point. I just don't want to find myself over analyzing and just over breaking down the market for no purpose. So this is why I'm doing it. So I want to focus on price that has obviously taken place over the past 4 weeks, which is the past month. So I'm highlighting right from here. That's what I'm doing. Zooming a bit in there, I'm gonna move the market a bit forward so you just see that nice and clear. Just move these out of the way so you're able to see. So as you can see, what I've done here, I've highlighted the lowest point that I can see from the current price right now to where the market is currently moving. So the lowest point I see from current price would be at the price of 1458.5,0, which is NASDAQ, obviously. It has been buying ever since then. But however, as you can see, without even analyzing, if I zoom in there on the 4-hour time frame, the market has had some hectic pushes to the upside and very aggressive retracements coming back down to give it that aggressive buy again. As we speak, the market is actually currently buying as we speak. So let's see if we can actually catch an entry while we break down the market. But first thing, before you want to catch any entry point, let's go into the chart, let's break it down. So let me give you a secret, right? This is a candlestick secret. The market moves based on time, right? And time obviously is infinite. So this is how it works. How you want to understand candlesticks from all the understandings or from all dimensions is not initially by knowing its names. It's just by knowing the purpose of time frames. So candlesticks and time frames work hand in hand, and this is how it goes. So if a 4-hour time frame takes 4 hours to build one candle, which means on a 1-hour time frame, that would consist obviously of how many candlesticks? 4 candlesticks. 4-hour time frame gives you 1 hour. 1 candlesticks on 4 hours, but however on a 1-hour time frame will give you 4. So that means the lower you go, the lower the price, or the lower the time frame, the more you keep scaling down to lower time frames, it does say more price action, more movement, more technical awareness. I don't know if you get that, but let's get into it. So obviously, to scale a bit more, one 4-hour candlestick is 4, 1 hour, and 1 hour obviously, and 1 4-hour candlestick is how many? Is 830. So the more we scale down into time frames and candlesticks, the more we go deeper into the time frames, the more we go lower and lower, we then start to understand what exactly is the purpose of technical movements. Because the more candlesticks, the better. Why am I saying that? Because we want to trade technical moves. We want to trade off the highs and low. We don't want to catch a moving bus. We want to get into the high, get into the low, get into the high, get into the low. And the only way to understand that is to understand your time frames and your candlesticks. Basic movement, no prodigy, no mastermind. Those are common logic that every single trader must know, that you must be able to understand the purpose of candlesticks and time frames. But most powerful is time frames. Like I say, one H4 candle is 4 on 1 hour. It is how many on 30? It will be 8. It is how many on 15? You do the math. And you go all the way to 1 minute. Exactly. And that's how the question goes back to, and a lot of people have asked, but how do you then end up on 1 minute? How do you end up catching the entry in 1 minute? Because I keep scaling down based on the time frame, right? If one 1-hour candlestick is gonna give me 1 candlestick per hour, then I know that 30 minutes will give me 2 of a 1-hour candle. But the 4-hour candle can give me 1 on every 4 hours, but the 30 minutes will give me how many? Give me 8. Let's get into it. So right now, I'm teaching how to actually master the entry and be able to estimate or analyze and see the possible direction of the market for the next couple of weeks. This is NASDAQ. For our time frame, I don't want to really go into much here. I just want to highlight the low point. I can tell easily off a naked eye that the market has been moving from a very powerful low since the 18th of August till today. However, it did have a high that it hasn't broken ever since. This high happened actually yesterday on the 4th around 12 o'clock, and the market has been trying to actually breach over that. And let's go into it. I'm going to go into the 1 hour time frame right now. Going into the 1 hour time frame. Change time frames. So what I'm looking for on the 1 hour time frame here, it's quite basic. 4 hour, I actually highlighted my low there. What I'm looking for here is nothing magical. I'm not trying to figure out the direction of this chart. I can already tell that the market is buying. So what I want to do now is actually continue to buy with the NASDAQ as it keeps going up. So what I'm trying to figure out is what is the next possible trade on NASDAQ right now as we speak. Let's get into it. So in this case, obviously, I am going to move instantly to the current price without even analyzing the back, because I want to focus what's the best trade to take right now on NASDAQ. I come into NASDAQ, obviously, this is 1 hour time frame, and immediately I see a high there, right at the top there, on the 1 hour. I see that, I'm going to highlight that high, and then I get my rectangle there and just highlight the low. The lowest point that I see obviously would be there, right below the current price, right there, where the market is currently moving. So if we zoom into that, now I want to know, what is the best possible trade to take on NASDAQ right now? Like I said, the market is currently buying. But when we go into lower time frames, we start seeing a bit of a dip or a bit of a heavier or better direction of where the market is possibly going at the moment right now. Is 1 hour really giving me the possible direction right now? Look, if you zoom a bit in, or you just take a closer look as to what's happening on 1 hour, if I zoom in right there, on the current price, the market has moved from a high, giving us a low, and then it pushed back up. Pushing back up, giving us another high, where obviously you sell, we would have sold at, and the market dropped again. After dropping, it pulled back, retraced back to the high, obviously retracing and rejecting on the previous low, giving us a new high. Then what do we do there? We sell again. So obviously the latest entries would have been now, NASDAQ would have been sell to this point. That's the take profit. As we speak, the market is currently retracing to the previous low area on the 1 hour, giving us a clean, easy sell. How do I see this? This is based on price action and market movement. If you watched all the previous videos, you should understand. Let's get a bit deeper. I'm not going to analyze on 1 hour, but what I'm going to do now is highlight all the lows and highs that I've seen from the current price. Current price is saying, I'm going to highlight the low. As you can see, as I'm highlighting the low, automatically it highlights the previous high. And the current, as I highlight the low, automatically it will obviously highlight the previous high, which initially that would make it the current high point. That is the current sell entry point. But we don't want to take the trade based on our 1 hour time frame. Why not? Why are we not taking the trade? It's because a big time frame like 1 hour is not really a good time frame or the perfect time frame to take an entry on and say, look, I think I'll make my profit today. Because the overall idea here is to make your profit today. I know that obviously it may look, or maybe on other channels or other analysis platforms, like, no, hold, whatever. You can hold, but you must have your daily target. I can hold trades for 2 weeks, but I know that there will be a certain amount of trades or profit that I must bridge on a daily basis. That's what I'm trying to show you. So we don't take the entry based on 1 hour. We have to scale a bit lower into the time frames, 30 minutes, 15, 5 till 1 minute. But what I'm gonna do now is highlight all the highs or lows that I see on a 1 hour time frame. I see another high and low here. Immediately when I highlight that low there, if you look closely, automatically picks up a new high. It's quite simple. There's a high there that I see, automatically picks up a new high. So I'm zooming in. Before I do that, I'm gonna go to 30 minutes time frame, just so we see exactly what I'm talking about. Let's do that. Let's give us a moment to actually load. There we are, we're on 30 minutes. So 30 minutes, it's getting more interesting because we're zooming in now. There isn't much price change, but what you definitely can see right now is that 30 minutes is giving us more candles. Goes back to what I spoke about, right? The more the candles, the more the movements. The more the movements, the easier it will be for you to spot the entries, because what we're initially looking for is the ups and downs, the corners. We're looking for where the market gives us the step ladder, high, low. If we're going on an uptrend, the market goes up. As soon as it comes back, sitting on the previous high, giving us a new low, that's what we want to buy. But you have to confirm that low on all time frames, 15 minutes, 30 minutes, 1 hour, 1 minute. I don't take an entry unless my time frames confirm it. That is the only way to really catch a genuine, clean sniper, not through any other voodoo stuff. Clean. This is what I call clean, basic trading without complication. We're in 30 minutes now. My highs I know that I've highlighted obviously with the red horizontal line, as you can see there. This is a sell area, and the market now has pushed down after breaking this powerful low, and it is triggering a sell entry as we speak. Price must go down. Price will go down. Why am I saying this? This current trend has been confirmed by 3 time frames: 1 hour, 4 hours, and we're confirming that right now on 30 minutes. But the question is, what do we wait for? So let me show you how you would have caught the entries if you had been traveling with it down. It's quite simple. We scale down to a lower time frame, 15 minutes. The lower we go, the more movements we see. The more movements you see, the easier it is for you to understand your technical movements, your technical entries. You don't want to, and I never get traders who take a trade based on an H4 candle. How do you do that? How do you not confirm an entry at its best time frame, which is confirming it on all time frames? Let's get into it. 15 minutes, I'm zooming out. Let's go. 15 minutes giving us more candles, giving us more confirmations. Obviously, then we start to trust the movement a bit more, as you can see. So in 15 minutes, what we're witnessing right now is that the market came down, rejected, obviously went back to the previous low, giving us a new high. That's why we sell. Before it can drop, like any other chart, it won't just swing down. It's going to consolidate, it's going to push, it's going to try to hit your stop loss, but you're going to remain, you have to remain confident about your setup. Once it hits there, as you can see, it hit there, and eventually it went down. It goes down, you're in profit, you choose whether you're going to hold, take your profit, or you either hold or you take more positions, or you close and then wait for the next entry. Initially, because this is NASDAQ, what I would have done is closed a couple of entries, left some open, and once it retraces back to the previous low, giving me a new high to sell again, and then what do? I go all in again. That's what I would have done right here. The market then obviously does come up on 15 minutes as well, as you can see. Let me zoom in right there. The market obviously does come up again, touching on the previous low, giving us new highs. You would have took your sell entry there, comes down, goes back up, get a bit skeptical. Is it going to go up? Is it going to go up? But this is the nature of the market, guys. The market does not move how you want it to move. You see the entry, it will temper with, it will keep moving back and forth between your entry point. You have to be patient. You have to trust your analysis. The market goes down, giving us 3 entries. So people normally say, you take your entry, this thing is not moving, keeps going back up. I say it's giving you more chances to make money. So the more it keeps triggering, going back to my entry point, I just keep going in. I just keep scaling in. That's how we make the money. That's how we flip small accounts into big accounts. That's how we make the 1Ks to 10Ks, 10Ks to 50Ks. Let's get into it. First entry point gives us, second entry, it drops. Second, on the next entry as well, what it does is it goes back to the previous low point, touches there, giving us another high, goes down, you're in profit, a bit happy, goes back up, goes back to the entry point, you're a bit skeptical, thinking, no, what is it doing? It's giving you another entry, you go in again, third time it gives you a touch. If the market does reject a certain point over 3 times, it has over leveraged the support or the rejection. Anytime from there, I promise you it's time to flow. It's time to move in its direction. In this case, it was definitely time to go down. Let's continue. Obviously, after the third possible entry point, the market decides to push down. And if you guys can see, I'm just going to zoom in there. The market decides to push down right here. As it pushes down, it breaks that. It breaks that candlestick. And then obviously that's a confirmation that, look, now is time that our sales are moving. What we are now looking for is more highs. As it keeps moving, when it goes up, we hit it on that side. We hit it on the highs. Here, why? Obviously the rule of forex: sell high, buy low. Simple. Hitting on the highs. As you can see, it dropped drastically. It kept swinging, kept going down. I'll zoom out a bit so you see it. And this is 15 minutes time frame. Do you want to confirm this entry point as we speak? It's simple. I've been explaining the entry points, the sell entries that have been happening on NASDAQ over the past day and a half. Right? I've been explaining the sell entry points that have been happening over the past day and a half. And as I'm explaining, I'm literally looking at the current price. Because I know this. I mean, I love trading. I eat trading. As I'm explaining, I can generally see the market giving us an entry point as we speak. So I'm not rush to the entry so you can catch it when you watch the video. Even if you don't catch it, you'll know how to catch your next entry. Let's go. This is the 15-minute time frame. Initially, the market breaks, gives you, as soon as it broke that low there, you know definitely it's going to go down, but still come back. So you choose whether you take your profit once it is swing down initially, take your profit and close, and then you want to enter again, or you just keep holding. You have to trust your setup. Market comes, it breaks there, it goes a bit up, sitting on the previous low, giving us another high. We add. We call that scaling in. Some traders call it a barcode. I call it the step ladder. It's really up to you. It's really up to you. Let's have a look at it. So the market now came down, and it's pushing back up. As we currently speak, this is just price action understanding. Knowing how to analyze the market without even doing much. Time frame understanding. Price action understanding. Understanding the purpose of candlesticks. I literally would have taken this trade without even analyzing. Because all I do, once I get into a chart, I just want to see movement. I want to see the diagonal movements. That's all I want to see. Once I've got that covered, then I understand initially what I need to do. The current entry point is still a sell on NASDAQ. Is it a long sell? It's not a long sell. It is a short sell, right? It is a short sell. As I did explain when I go back to the 4-hour time frame, that NASDAQ is currently on an overall hectic strong buy. So the sell that we'll be taking here will be extremely short, because as you can look, it's been buying for quite a long time. Even before, if I zoom out more, you see that NASDAQ has been buying from a very old price. So the sell is short, but very profitable. Very, very profitable. Let's go back to 15 minutes. Let's chop into it. 15 minutes, I'm zooming in right there, trying to figure out our next entry point. So what we need to do right now in order to take this trade, I'm going to do this, right? As we know, this current sell that we are on is a short sell. I want to highlight this high point in which the market must respect in order for me to confirm the sell entry. Somebody asked, but why aren't you using a trend line? Right? Because initially of my technical or level of intelligence when it comes to trading, I can already see where I'm supposed to put the trend line, and I can literally estimate exactly where it will break out, retest, and take direction. But if you want to show you, come through. Let me show you how to actually put your trend line. How to catch the perfect entry. What I'll do there, I'll go to a lower time frame. Let me try to put an easy cut in trend line that explains exactly how you should actually catch your entry. I'll do this. It's a bit too zoomed in, so 15 minutes is perfect. So let me show you something. Okay, this is perfect. How would you have placed your trend line? How would you have actually put it there? It's quite simple. Trend line, remember, work with 3 touches if it's not a big trend. So I'll put it here. This is a low, this low, and this one is pretty the same. I take the trend line from the lowest point to the highest point. I make sure the trend line does not cut into the body, flowing right before the lows, and I literally generally rely on the touches. So do we trade? Do we take entries based on a trend line? No, we don't. By the time the market breaks out and gives you a confirmation candlestick, it will already be late for you to actually take your sell positions. You would then have to wait for the market to retest, right? Then you go in. So you don't want to take your entries based on the breakout. You always take your entries based on the rejection of the market, right on the turning point. Trend lines are to just confirm the market direction. It's not for entry point. That's one thing you guys must know. So as you can see, I'm zooming out a bit. I'm going to go to 30 minutes. I've placed my trend line there, and I want to show you when I say trend lines are strictly to confirm market directions and not for entry points. So as you can see, the market did push up there, rejecting there. It did reject, giving us a double top or head and shoulders, as traders would call it. I like to speak plain trading language. I don't like to use these big terms because it does confuse people. So this would call a head and shoulders. You can see first shoulder, head, second shoulder, right? By the time the market, so as you can see, my trend line there is going so deep, right? Literally confirming that, look, the market is no longer going up. It has broken out, giving me the breakout candlestick. As you can see, right here, this is the breakout candle. That's the following candle. The following candle would be the confirmation. But is it really safe? Can I really take a sell after the confirmation candle when I saw the market reject at such a high? Of course I can't. But is a trend line wrong? It's not wrong. It did confirm that the market is going down, but however, it did not say there's an entry point. The entry is right on the rejection. So I would have taken my sell right here. Taking my sell right on the high. I have no risk at all when I'm taking the trade like this. So that's the purpose of trend. Trend lines are meant to just confirm entry points. I mean, to confirm market direction. I'll put another trend line right into the entry. Put a trend line on a low here, and I sneak it in perfectly there. 3 touches. Put 1, 2, 3. What does the market do there? As I zoom in, just do this. Let me just enlarge. Just do this. I just want to obviously stretch the candles a bit so you see it how I see it. Perfect. let's continue. So I was speaking about the trend line, right? And I said the purpose of a trend line is to easily just be able to indicate that the market is still continuing in the direction that it has been, or a possible change of direction. So as you can see, I've placed my trend line right here. Why did I place it? I'm looking for at least anything above 3 touches. The moment the market does travel over the trend line, that will be a breakout. Making sure that when I place my analysis, that the market, obviously, the trend line does not go into the body of the candle. These are all my touches, 1, 2, 3, 4. The market then broke out, confirmed, went down. Can you enter after the confirmation candlestick? No, you can't. Who enters? Yeah, mature. I don't know. A bit of beginners. People who don't know what they're doing. But look, you don't enter on the trend line breakout. You literally enter on the previous low that has now become a new high. As you can see, where is the best entry? If you look, is it when the market broke out, or is it when the market rejected? Obviously, on the rejection. That's how you catch a snap. Hope this video is gonna help you. Definitely become a better trader, master your trading, and just grow as a trader. Be patient with yourself, keep practicing the skill, and keep going. Don't forget to make money with the best in Africa. RCG. Let's go.